How's it going?
Doing great. How about you?
There
Doing
you
great,
go.
man. Hey, we see you.
Finally. All right.
Thanks for joining us, you guys. It's our first
Thanks for having
Instagram
us.
Live. We've been wanting to do this for a really long time. Man, we've been talking about podcasts. We've been talking about getting together, just not even talk about real estate. And
Right.
finally, we're here at
Right.
IG Live talking about real estate. Talking
Well, this
about
is probably
investment
just a
properties.
probably a small
This,
sample before we actually do podcasts.
yeah. This is the warm up. This is the warm up.
It's just a warm up.
Yeah,
Exactly.
Mark, you're invited to that too.
Oh, I'll be there.
But we are all gathered here today to talk about investment properties and cryptocurrency. I think the reason why we want to talk about investment properties today is because we have two very special agents with us that really specialize in investment properties. And so we want to take advantage of that. Thank you guys so much for taking the time to join us. Um, the Instagram Live is going to be more, the purpose of this is going to be we're going to be able to cut up this video and share it in the right context throughout your blogs and throughout your social media spheres. And we can do it do it with ours obviously as well too.
Right.
So tell us a little bit about yourselves. I know you guys have been real estate agents for a really long time. You guys have been killing it, and you guys actually really do specialize in investment property. So tell us a little bit about yourselves and how you guys have been doing in the real estate investment space.
Mark, you want to go first?
Yeah, I'll go first. So for me, I actually started off in lending way back when, about two. So I've been in the industry for a long time. I was doing lending all the way through the real estate boom and the crash when we had the 2008 real estate crash. And now I'm doing real estate full time. Partnered up with Walter here and our team. I mean, we just been working together, taking care of people, making sure that we guide them the right way so that they can make the right decisions when it comes to investing, when it comes to purchasing their house. We want to make it as seamless and as stressless as possible for them. So yeah, it's been nearly about 2 decades that we've been in this
Wow,
industry.
you're a double threat. That's great. I mean, last transaction I had with you, you're great with veterans, and you do investment properties. I know that much about you. And I didn't know. I mean, I know you've been doing this for a long time, but I didn't know it was 2 decades long. That's great. Awesome.
Yeah, it's been a long time. I mean, soft spot for the veterans. I'm not sure if you're aware of this, but my dad was actually a Navy veteran. So he
Oh, he was in the
served in
Navy.
the military. He served in the military 30 years. And
Oh,
then on top of
wow.
that, my mom was she was in the medical field for about the same time. So those two combined, love working with them. Special place right
Awesome.
here.
That's great. That's great. All right, Walter, tell us a little bit about yourself as a real estate in the space of doing real estate for investment properties for your clients.
Well, let me see. I started real estate almost nearly, I'd say, 8 years ago.
Yeah,
Me and you, we worked together for way too
the whole
many years.
time almost.
Yeah,
Yeah,
yeah, we just
pretty
broke one
much.
today. It was awesome. Thanks, Tim.
We did.
But
Yeah,
yeah, no,
thank you.
I've been blessed to work with several investors that, Southern California is flooded with investors. You already know that. And it's such a hot market because everybody knows that if you buy an investment property now, I mean, rents are always going up and they're always going to make their money back on rent. And it's just, seed money for these investors for later on down the road if, they were to use that to leverage to buy more properties or just to even take a loan out on, their portfolio to do something else. So, very blessed. I've learned a lot from you, and I've learned a lot from all my partners as well. Mark here, he's the one that gave me the idea, and this is where it kind of blew up for just our side, where we actually treat every home buyer like heroes, right? So he gave me the idea that, all these home buyers have their own special stories, whether it be
I like that.
investors or parents, they are all heroes in their own story, and we treat them as heroes. So, but, me and you, when we talk about, we always treat them as heroes. We just never really, actually say that. And I'm blessed to work with guys like you, like Mark, and uh, just move forward with it. That's our motto now. Everybody's a hero. We're just a sidekick in their story.
Absolutely.
You know, I love that. We really are. Everyone is a hero in their own story, but we kind of forget about everyone else. And when we recognize other people that we meet in our lives that are also heroes, we treat them with the kind of humility and respect that they deserve. I love that. I really like that. What about um, Walter, is there an area that you specialize in Southern California? Are there parts of California that's better to invest in than others? Tell us a little bit
You
about the
know,
landscape right now.
my nickname, or they call me now the Long Beach Digital Realtor. And believe it or not, Long Beach is a highly desirable zip code and city for investors. I mean,
Oh
I
yeah.
think like the last time I checked, around 72% of the homes in Long Beach are all rented out. So it is a hot zone for investors. It really is. So I usually work around this area, but I do business everywhere. I mean, I've sold and bought, and I still have, maybe pending transactions in San Jose, San Francisco, Oakland. So my team is all over the place, which I'm grateful for. But yeah, I would say if anybody were looking, my special area would be right here in the LA County, Long Beach, Bellflower, Lakewood. I mean, these areas near the beach is just prime location for all investors. And what I've noticed now that I've actually kind of branched out into Huntington Beach is another hot zone. I mean, they're buying $700,000 single homes, tear it down, they build it 3 stories up, and they're selling it for 3.5. So these are the investors I'm actually dealing with right now, and it's crazy. It's a crazy market right now to be in.
Break that down for me one more time. That deal that you just said. It was a tear down?
It was a teardown. So these are all homes near Huntington Beach. This is near PCH. So they'll
Yeah.
buy these existing single-family homes. It's around maybe 900 square feet. They'll buy it for anywhere from 700,000 to 900,000 because that's what
Okay.
it's actually worth. They'll actually invest maybe another 750 to $1 million to build it to these 3-story, luxury monuments. And they sell it, and they're going for right now. You can see it on Second Street, Fourth Street. They're selling it for 2.9, 3.5, and it's crazy because, and they're getting it at such a high demand that the moment they actually go on market, it's gone. It's really gone.
Oh wow.
Yeah.
Could you help some of our clients find those kinds of deals where they buy it for land, they develop it, and they end up flipping it and selling it or renting it out?
Oh, of course, of course. I mean, I will always recommend anybody that wants to jump into that type of market that they should be well educated, and I can actually help them out. But they need to form a team, right? And it's not something that you want to jump in right away. But if you want to take on such a big investment, you got to have the right team around you, maybe the right contractors. You have to know, all the material costs. The market fluctuation of the material costs. You got to make sure you spend at the right time. So it's those things where, as a team, me, you, and Mark, we're going to help guide these investors to make sure that they actually come out with a profit. And we'll do that time and time again.
I think that's where you guys have been doing this for such a long time really comes into play because you guys have a Rolodex of all these type of people that you've been dealing with in the past. And so when in touch with you, they get in touch with your
Right,
Rolodex. Isn't that right?
right. Absolutely true.
Mark, what about, yeah, Mark, tell us a little bit about the kind of areas that you specialize in, and also if there's other areas, some areas better than others to do investment properties in LA County, Orange County, and so forth.
Sure. I mean, like Walter, I felt left out. He's the Long Beach digital realtor. I have to be the Cerritos digital realtor, as you can see right here. Cerritos, there's not a whole ton of investment properties in Cerritos because I mean, that's my area of specialty. That is a
Right.
place where most people like to plant roots. Right now, if you do get an investment property in Cerritos, they're going extremely quick because the main people move out to Cerritos School District. That's the number one reason. So if you are able to get into a home and it's an investment home in Cerritos, almost immediately that house is going to get taken off the market. You could pretty much ask for top dollar for that rental property because people are willing to pay for that for their child's future, for their education. One area that
Right.
Walter and I have been running into where we're seeing a lot more people investing in since the price of homes have gone up quite a bit. So where can people get homes for, basically a really good price, but at the same time get a lot of home for it? We were looking at areas like Riverside, um, Jurupa Valley, areas like even Rancho Cucamonga. They're able to. We were specializing in a lot of those areas just because of the fact that you can actually get into a house at a decent price that can still generate a good amount of rental income on that particular property. So those areas have been
Right.
pretty hot for us too.
Now, Mark,
With the
we can't forget, we can't really forget. I mean, the person that really makes all this magic happens is actually Tim, because we always call Tim, like, hey, Tim, I need you to make the loan work. So, yeah.
no,
So, Tim, I mean,
no,
have you seen an increase of numbers of investors applying for home loans to actually buy these investment properties?
absolutely. I mean, there's been a slight uptick in people buying investment properties
Right,
because there's people are starting to become more and more aware of real estate. And I know, I mean, real estate's been around for a long time, but the narrative has continued. Anytime the stock market goes up, anytime, and now that we have cryptocurrency, people making money off of cryptocurrency.
right.
More people are self-employed. Business has been really good the last year for them, and
Yep.
they're looking for They're looking for avenues for them to invest that money into. And so we have a lot of first-time investors that are coming in. They're going in conservative. A lot of them are buying single-family homes
Right,
out of state and in California. If they're smart, they're buying those multifamily units, right? You and I, we always talk about we all investors. They should be buying those multifamily units.
right,
They appraise fast and they cash flow very, very well. Best bang for your buck, right? We were just talking about that a
right,
minute ago. And so, and we have a lot of return investors too. They were, it's kind of like we went through a time in the pandemic where people were really afraid to branch out, right? They were afraid to go to Disneyland. So for about a year, they didn't go to Disneyland, and then after the pandemic, they're going to Disneyland every day, right? So they didn't buy any real estate in the last year, and so now they're starting to come out and they're buying some investors are buying them two at a time right now. That really
right,
speaks to that really speaks to like how hungry buyers are right now. But also we have a really short supply of real estate as well. Me and Benson is the owner of NestMade Mortgage, and we were listening to a podcast from Planet Money. And what Planet Money was saying was that 2008 and prior, we were building 2 million homes every year,
right,
right? Brand new homes. That's 2 million homes, a new supply every year. After the recession, by the time we had recovered from recession around 2010, by the time we came out of it, we were building only 500,000 to 1 million homes a year. And
right,
that number still holds true today. And there's a few reasons for it, but one of the most compelling reasons is why do we have so few homes being built? Why is it that we have more demand every year and less supply every year? It's because we don't have enough people building the homes. The idea of people growing up to be plumbers is no longer an avenue that their mothers want them to do anymore. That's according to the podcast. They don't
right,
want their kids to be day laborers anymore. They want them to sit behind a computer, have a nice office job, and sit on, with AC, and that's the culture now. That they actually called it brainwashing. We're brainwashing our kids right now to say, "Hey, plumbers make good money, but we want something better for you," because the generation before us, where they were like, we're talking like 2 generations before us, we're talking about assembly line workers, right? And then the generation after that, we're talking about plumbers, electricians, construction workers, general contractors. So now the next generation is us, and we're being taught not to go into those kinds of fields.
right,
And
right.
if we have a shortage of people building the homes, then the cost of building homes go up too.
Right.
Have you guys seen a lot of new homes in like the last 10 years or so?
Personally, I mean, I always see new development. I mean, I can't compare to 2008. I know I wasn't in real estate. But I was in the construction field. But I mean, to see new developments popped up left and right, I mean, I see it all over the place.
Yeah.
So I don't know what to compare it to, but I do see a lot of new developments. But here's the one question that's probably going to go off topic. This is what's on everybody's mind, is that they're always asking, and this is the of buyers when there's a pandemic going on, everybody's losing their jobs. What type of people are you actually seeing actually applying for these loans?
Right. So you can actually still buy property if you don't have a job. You
Oh,
can
wow.
actually use the rental income from the property to qualify you. And the technical term for that type of loan is called a debt service coverage ratio loan,
Okay.
or in the business, we call it a DSCR loan. But what that really means is that if your income covers the monthly payment, like the mortgage, the taxes, the insurance, if your income can cover the PITI, as we call it, principal, interest, taxes, insurance, monthly payment, then you actually qualify for the loan. That
Wow.
is by far the most popular investor loan out there. Yeah. And so really most of the time sometimes that requires a bigger down payment to make that happen.
Right.
Mhm.
But
um,
percentage-wise, I mean, down payment, what are they expecting to pay?
in California, because the appreciation is so enormous, you might have to do like 50% down to make that happen. Yeah. Now, there are other ways. If you have your own business, if you have a W-2 job, if you work for the government, you can use that income to qualify you for investor properties too. Now, the key part for investor properties is 25% down. That's
Right.
really key. You could technically buy with less, but we recommend here at NestMade Mortgage to do at least 25% down so that we can get you the lowest rate with the fewest amount of fees. And that's what we've been telling your clients all the time too,
All
right?
the time.
Yeah,
But you
all the
see,
time.
you guys have so many options of, types of loans that they can choose from. I mean, and it's never really announced anywhere. It's not published anywhere of what these type of loans are. So you
Right.
might telling us a couple of these options other than the one that you actually just said.
Yeah. You know, I would say what's even more important is kind of like the person, right? I would try to keep your debts low and I would try to keep your credit high, because when your debts are low and your credit is high, you have more options for more programs. For example, let's talk about what good credit is, right? 700 FICO, is that good credit? It's in the 700s. It's not really that good for investment properties. You
Right.
want to be 740 or above. It's possible, it's doable. If you find a good deal, you should not pass up on the deal just because you have 700 FICO. Let's be
Right.
clear, right? If Mark finds you a good deal and he says you got to buy it, and you said, no, 700 FICO, I should probably wait a month, improve my credit score. No, 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 you buy that property, okay? But while you're waiting, right, you're saving up for that down payment, you might as well be working on your credit, right? How do we work on credit? It's really important, right, to keep your credit card limits low, but use them at the same time. Kind of an oxymoron, right?
Right.
You have a $10,000 credit card limit. You want to stay below $3,000 every month.
Right.
You never want your balance to go above $3,000. That's like a 30% utilization ratio.
Right.
If it's possible, keep it under 10%. Okay, that's what they say. Keep it under 10%. Now, you might say, hey, I don't have a $10,000 credit limit on my credit card. I have a limit of $1,000. Hey, I have to live, right? $500 is nothing. Here's what you do. You have to call your credit card company and ask them to increase your limit. It doesn't hurt to ask, right?
Right.
Now, here's a caveat, is that the credit card company will ask for your permission to pull your credit. And you may not want them to pull your credit, okay? Just ask them to increase your limit on your credit card without without the inquiry, right? Every time they pull your credit, you take a hit on your credit.
Right.
Don't let anyone pull your credit.
Yeah, and we actually went through this with one of my clients. I mean, the guy pays off his debt every single month. not knowing that he's supposed to spend and maybe keep a little. And we all thought he had perfect credit. I mean, he has a lot of
Right.
money, right?
Yep.
But
Yeah.
then we pulled his credit. It was way below 700, and we're all in awe of how this guy that has no debt whatsoever to actually have a score like that. I mean, that was befuddled for me. But luckily that you actually came into the picture. You actually guided him the right way. You told him that you needed to do this, just like you said, and he got his
Yep.
score up, and then he bought all his houses.
That's true. People with a lot of cash tend to have bad credit because they don't know that you need to use credit to have good credit, right? You have to use your credit cards to have good credit. That's why a lot of senior citizens, by the time they pay off their car, they pay off their home, they stop using credit cards. They go on a cash basis. Well, they had 800 FICO when they retired, and then within 5 years, it goes from 800 to 700 to 600 to 500 to zero, and then they have to rebuild that credit again. So even if you have the cash, if you intend on financing any time in the future, keep those credit card balances. Use it a little. You don't have to buy a big screen TV every week to get good credit. Okay, you could buy a pack of gum. Just like I was telling our mutual client, every time you go get gas, I want you to buy a bottle of water with your credit card. That's what I tell them. Every time you when you use your Amazon, when you buy something on Amazon, don't use your corporate card. Use your personal card every once in a while. Because when you use your corporate card, your social security number is not attached to it. That's another thing. If you're self-employed and you have business credit cards have a lot of rewards. They're really great. But you may not be aware that if you've only been using business credit cards, you might find that your personal credit, has been diminishing every month. We had a client who has 4 credit cards. And when I pulled her credit, I told her she has 0 credit, which is worse than 500, right? We're talking about 0 compared to 500. At 500, you're like 500 points up, right? And she couldn't believe it. She said, I have 4 credit cards. I use them every day. I just use them today. And I said, what kind of credit cards are they? Are they for your business or your personal? And she says for her landscaping business, for her business. And that's when she learned that her social security number is not attached to those credit cards. So we gotta be careful. For those of you that are self-employed out there, be careful.
Now, for those that actually wants to go into real estate and buy property year after year, I mean, what are the things that you would actually advise before looking at them? Because I know there's a lot of new investors that want to buy a house and they want to maybe rent it out for a year and then use that rental property as leverage to buy another rental property. So, I mean, what are the steps that they should actually take, I mean, in your eyes, that their paperwork should be in order for them to actually get approved every single year?
Okay. The first thing I would do is actually speak with a loan officer so that they can get your income, get your credit, and they can formulate a very specific plan for you. But let's just talk about a general person for a moment, okay? I would say 25% down and good credit is a start. Now, you want to do, if you can continually save up money, right? Now, 25% down, 25 sounds like a small number, but if we talk about $500,000 property, we're talking about like $125,000, $140,000 after closing costs. That's a lot of money. It takes discipline to save up money every day, right? And it takes a lot of heart and courage to buy your first investment property. I was watching a podcast, a video cast. It was a conversation, and the gentleman he was multi-millionaire, he said, the first million is the hardest, the second million is inevitable, and the third million is the easiest. Once you get your first property, it becomes momentum, right? Properties appreciate. Let's say you buy a $500,000 property, you put in $125,000 into it, you end up, that property appreciates over time, right? If you bought property anytime in the last 30 years, you're up. Anytime in the last 30 years. I'm talking about if you bought in 2008, you're up right now, okay?
Mm-hmm.
Here's how investors do it. They buy property, they put the minimum in, 25% down is what I consider minimum, as you know, right? It appreciates. You do a cash out refinance. You take equity out. You buy your next property. Doing 25% down is you're not over leveraging yourself, right? One of the big problems that we had in 2008 is people over leverage. They're doing 5, 10, 15% down on homes that they don't really care about, right? People bought too many properties with too little down with really bad credit, okay? So here's what we advise. We advise you do 25% down. You keep saving up money, right? You have that W-2 job. You're self-employed. Keep your expenses down. You have to suffer a little bit now to have a good life later, right? We all have to suffer now. You can't have your cake and eat it too, right? You want to buy a new car? You can't buy a new car and have an investment property that same year. That doesn't work that way, you know? You got to pass up on that brand new car. But let me tell you, once you get your first investment property and it appreciates, we can help you do a cash out refinance. You take that money and you buy another investment property. Now you have 2 properties that appreciate. Then you, guess what? Then you do a cash out refinance. You don't over leverage, right? We will never let you over leverage. We're just talking about free money that you received through appreciation, through just time gone by in the market. You cash out, and then guess what? You buy your third one. But now you have 2 properties appreciating. That's double the time. That's 50% less time that you took for you to get that money than when you bought your first property. Now you have 3 properties appreciating all at the same time. And that's how you kind of get that momentum going. Okay. And all the while, you're getting a raise in your job. Okay. You're paying off your car, right? You're not buying a brand new Mercedes when you pay off your BMW. You're not doing that. Okay. Here's the one thing that we don't, here's a problem. Okay. I had a friend, she bought a brand new home in Cerritos, actually, okay? As soon as she bought a home, right? She bought a home after she got a raise, okay? And after that, she's telling me she wants to buy investment properties, right? But then she gets another raise because the economy is doing ridiculously well. And guess what? She buys a brand new BMW. True story, okay? But now that she bought a brand new BMW, her husband has to get a brand new BMW. So now they have 2 BMWs and they have a house. You know, and these days car loans are like 6 years, 7 years long. Okay, we're talking about like $1,500 monthly payments, right?
Yeah.
Do you think she's ever going to be buying an investment home anytime soon?
Nope.
$1,500 is a mortgage payment, by the way. Seriously. And we used to have $300 like monthly payment for a car. Now we're looking at cars with like over $1,000 monthly payment. That's a mortgage, you guys. That seriously is a mortgage. You know, I kind of wanted to ask you guys, right? Like, I've really wanted to ask you, like, Mark, what kind of advice on the real estate side, right, do you have in general for people interested in buying investment properties? You know, because I know you guys, with all your investors, right, what's the kind of common things that you're always reminding investors about, whether it's like areas, whether it's good or bad habits? What are the things that they need to know, and what are the pitfalls that they should stay away from?
I mean, the things that you want to know is you want to do your research on the area, right? You want to see what.
Oh yeah. That's right.
It's key because you want to see what type of rental, how much they're collecting monthly on the average rental that they collect monthly. 2, we got to make sure that they speak with a lender.
Yeah.
That's key. I mean, I'm gonna throw that right back to you. We got to make sure that they speak with the lender. Like you said, we don't want to have them over leverage, overextend themselves.
Yeah.
And then one other question that other people ask is, you know, if I were to get into investment properties, do I need to hire a property manager? Like what type of things?
That's a great question. Yeah, what do you advise people to get property managers after they've completed the sale of an investment property?
I mean, Walter and we agree on this 100%. If you're getting into your investment for the very first time, you want to get yourself like dive deep into it. You don't want to hire somebody to start doing work that you've never experienced yourself. So you want to take on what it's like to be the landlord, what your tenants are going through.
I totally agree with that. Yeah.
What kind of questions they have, what kind of issues you're going to come into, calls you're going to get late at night, right? You need to understand what a property manager would go through, and if you don't know exactly what type of steps that they take to resolve a lot of your tenants' issues, you hire a property manager. It's very easy for them to not do anything possibly just to get by you if you've never actually experienced and gone through it yourself. So if you're able to handle, especially with an investment property, a lot of times you're only dealing with 1 to 4 units. It's not likely you're going to get into more than 4 units. So it's
Right,
pretty
that's
easy to
true.
manage because it's not typical that all four are going to have issues at the same exact time.
I follow
So
you. Let's educate them right now. 1 to 4 units, guys, is a residential property. Even if you're using for investment purposes, 1 to 4 units is investment. When you're dealing with 5 units or more, that's considered a commercial property, and then you need a commercial loan. When I say commercial, I mean that's non-Fannie Mae, non-Freddie Mac. For those of you that are familiar with those terms, you end up with you have to go to commercial bank for those kinds of loans. So if you're just starting out, you're going to be looking for 1 to 4 units, right, Mark?
right, absolutely. And another question we get asked is, should I buy my first home?
From my own point of view, when I have kids, so I'd rather invest my time in buying investment properties so I can secure their future. I mean, plus if you buy investment properties first, I mean, everybody, and I'm pretty sure Tim can agree, anybody that buys their first home, it's never it's really not their dream home or their forever home, right? They're always going to move up eventually. So knowing that fact, and we've been in real estate for so long, what, a decade, 2 decades. So knowing that fact, I'd rather actually invest in properties first, and I advise a lot of my buyers to actually invest in property first, and then use that as leverage to buy their forever home later, right? Because I mean, you rather have some type of residual money actually coming in. That way, when you do buy a home, I mean, you can use that money to pay for your forever home or your dream home. But other people that has a dream of getting married and then moving into their home right away where they can start a family, great. There's nothing wrong with that. But everybody has different paths.
I
Hey,
agree. Yeah, I don't know what happened. It's like someone hit pause on my live, and I was kind of worried for a second. But I totally understand what you're saying. If you could stick it out and not buy a primary home to start with, because you can buy an investment property, and that investment property could help you pay for your primary home in the future.
right.
Right? But if you go primary home first, the middle ground is you buy 3 units, and you actually told me this today, Walter, and this is really smart. The middle ground to that is that you move into a duplex or a triplex or a quadruplex, right? Like with just like 2 units, 3 units, 4 units. You live in one unit and you rent out the other. That is probably the best way to start, in my personal opinion. And that's why we have great agents like you, because that was a great idea. You live in a unit, you can rent out the other two. Guess what? Those other two will cancel out your mortgage. You get the appreciation, right? Someone's paying for your mortgage, then you can continue to save up money to buy your next investment property.
Right.
All the while, you're doing what Mark suggested, is that you're learning to be a landlord, right? You're learning how to property manage. You got to get your hands dirty. Yeah, you're not going to do serious things like plumbing. You'll hire professionals for that, right? The little things you're going to have to get your hands dirty a little bit just to learn the business, so that when you have your real estate empire, you know how to delegate because of you're now experienced, and you know how to delegate and manage properly.
exactly.
Yeah. So Tim, I mean, and everybody that I know always asks this. I mean, is it easier to actually start investing if they already own a property? And you kind of already answered that. I mean, You know, in your eyes, what do you think?
You know, if you already own a property, owning a property is kind of like a liability.
Right.
It's you have a lot of monthly payments that you're making, taxes, insurance, and your principal. If you're sitting comfortable, I think everybody's situation is different. If you have no choice but to buy your primary first, you have to buy your primary. If you're
Right.
living comfortable at mom's house and you were able to save up 20% down and you just need that last 5% down to buy investment property, it might make sense for you to make the leap because once you buy your investment property, your primary home is going to follow soon after.
Now, let's say for existing homeowners that has maybe 300,000 in equity, is it easier for them to invest?
Yes, absolutely. I mean, when they have that equity, if they can do a cash out on their primary home, you can actually take out that equity, right? That's the appreciation that you've gained along the way. That's the market telling you good job for sticking it out through hard times. Then you can use that equity and purchase your next investment property. Yeah. So if you have $300,000, you can buy $1 million in investment properties, or you could buy two $500,000 investment properties. $500,000, you can probably get something in Long Beach. You can get something
Right.
in Carson or so. But you know, another thing is that I've been wanting to ask you guys is like, Walter, what kind of competitive advantage does a real estate investor have in this market as opposed to, you know, when they're going up against people who are buying it for their primary home? What's the competitive advantage? Because you were talking about a little bit earlier that they make, you know, when you're in real estate investors, you're actually making income off of this property. So the numbers might make a little more sense for you to buy it at a certain price range than
Right.
when you're up against other people who aren't going to be earning that investment, that monthly rent.
So wait, you're asking what is the competitive advantage of being an investor versus just a everyday buyer?
Yeah, when you're up against multiple offers, right?
Tons, tons. I mean, look,
Yeah,
I mean, we all know this, right? Right? Because I mean, as an investor, if you're if you're labeled as an investor, home sellers, homeowners know that you mean business. You're serious. You're not going to ask for anything that much. I mean, you'll probably waive the home inspection, and they just go in and they just want the home because they know they run dollars and cents, and they know that they're going to buy the home that makes them money. Versus where the everyday buyer they buy on emotions. So usually home sellers they rather deal with investors that will give them a reasonable amount of money for their home. So they have the complete advantage. They probably have their own construction team or contractors, and you know it's always the advantage of the investors when it comes to buying a home, right? I mean it just looks that
right,
much better. Like some of them they even form groups where they have a team of investors and they'll just buy it cash. So I mean those are the things that we actually face, and it's kind of hard for the everyday buyer to actually go against and put an offer against an investor. It's
right.
really so, yeah, I mean, there's so many different advantages as an investor. And when you do start investing, I mean, on your end, you can do bridge loans from what I'm learning from you.
Yep,
You can do cash out refi and just whatever you need, all the resources and tools to actually execute and buy the next home. You have it, right? Because I mean, you have so much leverage versus the everyday buyer that maybe has one business or a W-2. It's just really not that strong when you're putting this whole package together.
right. It's really about the team. I totally agree. We have a
Yeah.
question from Van JC. Could you explain cash out refinance a little? Absolutely. And if anyone else has questions for Walter or Mark or I, feel free to type it into the chat and we will get to them for sure. You know, that's a great question. Cash out refinance is basically you're taking equity out of your home. So you're increasing your loan amount. So if you started out with a $400,000 loan amount and you've been paying it off little by little, and also your home has appreciated from 500,000 to 700,000, you have a lot of equity there, and we can bring that to the bank, and then we can take money out. Literally, you can take cash out, put it into your checking account, and you can use that money to buy additional and other investment properties. Now, here's how this usually works. Okay, that's simple enough. But how does this work? The real estate market, it has booms and it has crashes, right? Economies crash and they grow. when economies crash, that's when real estate investors, they start doing the cash out refinances because their appreciation is there, right? They're not going to have appreciation anymore for that moment, but the interest rate is super low. That's when they're doing their cash outs. And then that's when they are taking advantage of the market when things are slow and the economy is low. That's when they start eating up and picking up properties. They don't cash out usually when the market is super hot and
Right.
interest rates are high, right? When the economy is doing really well, interest rates are high, right? The time to do cash out refinance is like sometime like right now. So you kind of have to ride the wave, right? You buy at a certain time and you do cash out refinances at a certain time. All right. Let's go
Now,
to.
well, oh, sorry.
Mhm.
Somebody else have questions?
No more questions that I can see. Yeah, you got it, Van. You're welcome.
Now,
Go
one
ahead.
of the new things now, I mean, I know we're supposed to talk about this, so hopefully we have enough time. But now, people that are actually investing in crypto, they're using it. And the people that's actually investing in crypto, they kind of remind me of, the donut shop owners or any business owners that likes to report or net low income, right? I mean, you tell all of them they have to season their money for 2 months. And so crypto, from what you're actually telling me now, you can
Yeah.
actually use crypto to actually buy houses.
Let's talk about that. Fannie Mae and Freddie Mac, right, have recognized cryptocurrencies, finally. That means that I can do cryptocurrencies. I can accept cryptocurrencies, okay? Here's what's required, and you guys might need to write this down for this, okay? Is that for cryptocurrency, it needs to be in your ledger for 2 months, okay? So that means that the cryptocurrency has been sitting in your account for 2 months. That means it cannot have been deposited 10 days ago, okay? So if it's been sitting there for 60 days, then we can, if you transfer that money with the direction of your loan officer, okay, you need to double check this first. Let your loan officer see your ledger to vet it first. Then you're going to transfer that to your checking account. You're going to liquidate at the time when your loan officer tells you to, okay? You don't have to do it right away. If you can show your ledger with the money leaving your account and entering a domestic U.S. bank account, then you're totally fine. We can use that money towards down payment and closing costs. So you're 25% down. You've made a lot of money in Dogecoin. Congratulations. You want to move that out into something more stable and reliable, right? You've done well with your gambles. Or maybe you're not a gambler. Maybe you're a sophisticated Dogecoin investor. You want to take it out? You want to put it into some real estate? You're allowed to do that now.
You gave great advice for one of my buyers because he was actually planning on doing that. But you also told him to make sure you also, talk to their CPAs because, there are capital gains if you do liquidate cryptocurrency. And you actually advise anybody that were to do it, make sure to talk to their CPA first, right? Which I thought was great. And, make sure that they put money on the side, at least for the end of the year, if they were to have to pay. Is that right?
That is right. Yeah, when you close your position, just like stocks or bonds, you have capital gains to worry about. So you should speak to your CPA about the tax liabilities. We can't really speak to the tax rate that you'll be getting, but of course, anytime you make money, Uncle Sam needs his cut, right? That's something that's inescapable. Now, one thing though that you can do, and you can do this with stocks, you can do this with Bitcoin, is that you can actually, and Walter, you're the one that was telling me about this too, is that you can borrow against your cryptocurrencies and you can borrow against your stocks. Now, why would you borrow against something you already own? Because if you were to close your position, you have to pay taxes on it right there and then. Okay? If you borrow against your own stocks or you borrow against your own cryptocurrencies, and we're not really allowed to suggest banks, right? But there are specialized banks that can help you borrow against your cryptocurrencies, okay? Certain cryptocurrencies anyway. And so when you borrow against it, you do not have to pay taxes on debt. That's pretty intuitive, right? You do not need to pay taxes on debt. So you can, that's a certain way of cashing out. Also, when you cash out on a real residential home, anytime you cash out, you also don't need to pay taxes, for sure. You do not need to pay taxes because when you do a cash out refinance, That's debt. Yeah, you have cash in your hand, but you're actually taking out debt to do that. And
Right.
so what you want to do is that you want to take that money, right? You don't need to pay taxes on it if it's a loan, and then you can use that to get another loan for investment properties.
Awesome.
Yeah. Yeah. Now, Mark, I have to ask you this, Mark. I mean, do you see a lot of veterans going into investments? I mean, that's your area of expertise right there. I mean, do they use VA loans as part of investments?
You know, for VA
Yeah,
loans,
right.
it's really intended for the borrower, for the
Right,
veteran's place of living. Yeah.
right.
Oh man, it would be amazing if we could use it for investment
Oh, I'd
properties.
love it if you could do it for
Everybody would serve. Maybe they should do that because everybody would serve if
Yeah.
they had that benefit.
Now, do you foresee anything that changes as far as like rates, or maybe lenders now are going to change their model to maybe accept crypto? And is there any particular crypto that you guys might accept instead of trying to liquidate this in the near future?
You know, as of right now, they do have to liquidate. Yeah, I don't see them actually taking in cryptocurrencies because in order for them to do that, escrow companies would have to have a special cryptocurrency escrow account to accept those coins.
Right.
So as of right now, and also in the near future, they're gonna have to liquidate those coins. As far as interest rates are going, right, we don't really have a crystal ball on this. We kind of just read the news like everyone else. But
Right.
because we've been following the rates every single morning, 3 times a day, we believe that the rates right now are going to be the bottom. So if you haven't purchased right now yet, if you're thinking about next year, I would, and you can afford to buy this year, for the interest rate alone, I would get into the market. I would call Walter, I would call Mark, and I would message them and DM them and let them know that you are able to buy because the interest rate is a very big portion of the cost of real estate. And
Right.
if you can save half a percentage point, it's a huge win because that's you know, if the more you can save in interest, when I don't think people realize when you have like a $400,000 loan, right? By the time you pay that back over 30 years, you would have paid back like $350,000 in interest. It's really like that much.
Right.
So if you can save just like a little bit of interest on that interest rate, it could go from $350,000 in interest paid to maybe $300,000 in
Right.
interest paid. And that's an additional $50,000 in your pocket that from just buying sooner than if you were to buy later, not to mention the appreciation that you would have gained if you bought now than if you waited, right? And so that's why it's always right now with the rates being low, it's usually we usually have been encouraging buyers to take advantage of the low rates.
So, I mean, give all the investors right now an idea of what the rates are. I mean, if they had good credit, 740, and they had the money to actually do it, 25% down. I mean, what is the going rate right now for them, anyways?
About 3.2, 3.3,
Oh,
depending on your
wow.
situation. Yeah, rates are really low for investment properties. I mean, it was just a couple years ago that if you were to buy an investment property, it's like 4.75.
Yeah.
That was normal.
Yeah, we did
4.75,
some
like,
over
okay.
5. That's crazy.
Yeah.
Now, do they have the option to buy the points down?
You know, they might have to pay a little bit of points, but it's pretty minuscule. Yeah,
Okay.
unless you have bad credit, they're not going to be charging you that many points.
Oh, no. I mean, do they have the option to buy the points down?
Oh yeah,
Right?
absolutely. Yeah,
Okay.
they can spend a few thousand to get it down to 2.75, 2.625 if they want to, especially if it's a 15-year fixed. If you can do a 15-year fix on an investment property, you're instantly in the 2.6 to 2.7 range.
That's incredible.
Wow. That is low. That is really
Yeah.
low. Holy smokes.
It
Wait.
makes you feel
How
old
come you're
because
not buying investment properties?
Yeah. Yeah. That's what we're gonna do tomorrow, Walter. We're gonna go out there and we're gonna buy some investment properties right after this
Oh,
call.
yeah. Let's go.
Yeah.
I don't even need to call my lender. He's right next to me.
Yep. All right.
But
Did you guys
Mark,
have
you
any
got
more questions?
no, I'm just saying it makes me feel old because 20 years ago, investment properties were over 8%.
Oh
And I was on
yeah.
a 30, and I'm like, man, to get them at
Oh
almost
yeah.
75% lower than it was back then, it's amazing.
That is amazing. I know. You know, we are at historical lows, and there will be a time when rates are really, really high, and people will not remember that rates were at 3%, 2.5%. One day our rates are gonna be in the 6% range, and we're gonna say, oh, 6% is really, really low. And I mean, in the 80s and 70s, interest rates were at 17, 18%.
Uh-huh.
Yeah. Yeah, I mean, I have so many clients. I mean, if you actually look and you actually see these files, I mean, their rates, even though back in the 70s, it's 7.25, 8%.
Yeah,
I've seen as high as 12.5. That's crazy. I mean,
yeah.
so for the rates to be as low as it is right now, I mean, I hope that anybody that had the ability and power to actually take advantage of it, they should. They really should. And
Absolutely.
but yeah, I mean, you have any other questions for me, Tim? I mean, we talk to each other every single
We
day, so
talk all the time.
and
Yeah,
you know, time flies every single time me and you talk. So you know,
yeah. Absolutely. No, I mean, I think it's you know, thank you guys so much for taking the time to, I know you guys are super busy with clients, right? And you guys spending the time to be here to share your knowledge. I mean, we're so grateful for you to really take the time. So thank you guys so much.
Oh, thank you.
no, we thank you. You know me. I can't thank you enough every single day. You've helped everybody out. Every single client that has actually come your way. I mean, you're to me. I mean, you're the other superhero. You're not a sidekick. You're because you saved so many. Even my own family. I mean, my sister, my
Yeah.
brothers. They all used you, and you've saved them so many times. So anybody out there that's actually watching this, dude, Tim has the heart of gold and NestMade. I mean, they do impossible things. So yes,
You're the
Tim is
best.
the
I
man.
appreciate it. If anyone here is looking for an agent, Walter Vann and Marc Lacorte are the people to go to. We've been working with them for years. We don't have any kind of monetary affiliation with them. This is all based off of long-term trust and friendship and just really knowing who they are as a person. If you're you know, there's really there's so many horrible realtors out there. And I'm really happy to know a couple of really good ones. I'm
Wow.
serious. I mean, we work with a lot of realtors, and I'm really, really blessed to know you guys. So thank you guys so much for being here.
Oh,
Thanks for
thank
taking
you.
the time,
Thank you,
and
Tim.
we'll probably talk and be working together in just a few minutes after this.
Oh, definitely, definitely. We still got some files open.
We do. All
All
right.
right,
Break is
all right,
over, you
Mark,
guys. Back
Tim,
to work.
back to work. Thanks,
All
guys.
right, gentlemen. Thank you
Thanks, you
guys for
guys.
joining. Take care.
See ya.